Hey, traders. Oh gosh, that's a lot of Raghee. Hang on. Let's get the screen share going. Hey, everybody. Welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing well. All right. So we're going to take a quick peek at the economic calendar before we kick this off. This is head on over here. This is a week where we know we're going to be dealing with a lot of Federal Reserve speak before we go into a very truncated week in terms of the Thanksgiving weekend. 4-day weekend really is what it amounts to. Everything sort of crescendos tomorrow, though, because that is when we have pretty much all the hot zones packed into one fun-filled session. That should be a fun one. My Sector Secrets Mastery folks, we have our double header tomorrow. So maybe prepare today, carb up today, get a good night's sleep. We've got that going on tomorrow. Everything from core durable goods, unemployment claims, services PMI, manufacturing PMI, new home sales, consumer sentiment, inflation expectations, FOMC meeting minutes, and a partridge in a pear tree. That's what's coming up on Wednesday. Today, we get a lot of Fed speak. And so we've got George, Bullard, Meester. Anytime we have different members, I would say Meester and Bullard, actually all three of them, are potential market movers. Which markets? Keep an eye on bonds. Keep an eye on dollar. Of course, keep an eye on the equities markets, but we're going to see the way in which, if at all, we see an adjustment on the expectations for, forget December. I mean, that's pretty much, well, no, I take that back. The closer we are to 80 on moving up to 4.25 to 4.5%, the more that's fully discounted. But what's happened recently is we're starting to move towards the 4.5 to 4.75. So December might be different, but does it change anything about May? Yeah, it is actually. So the reason December is inching a little bit towards the higher end of the range, which is not a shock, by the way, the equity markets could absolutely rally with a 5%. So 4.75 to 5 or 5 to 5.25 is perfectly fine. The equity markets are not going to freak out. This is within expectations as long as we're hovering around 5%. 5.25 to 5.5, we might see some heaviness in the equity markets, but this is perfectly within acceptable expectations, what we have already baked into the cake, and that seems to be, we're inching away from 4.75 to 5%, which is where we were last week, and to 5 to 5.25. Why do we care? This is the terminal rate. This is where we think the Federal Reserve is going to take rates to and then plateau. And that is where we sit right now in front of a significant amount of data and FOMC minutes tomorrow. And not just one, but 3 Fed speakers going into today. All right, gang, as always, phone lines are open for your requests. Go ahead and type in your questions if you have any. And let's go ahead and jump into our questions. All right. So first up is Andrew. Good morning. I was wondering, what is an effective strategy for scaling up or down on contracts traded? Thank you very much. Andrew, terrific question. I love questions on scaling. Seems to be a dying art, so love that it's coming back. And scaling, for those of you that are not familiar with the lingo, is predetermined, and that's the really important part of it. Predetermined levels, price triggers, or maybe it's a technical cue that gets us to enter a trade incrementally, right? Usually they're not equal. There's usually some legs of the trade that are larger than others. That's the way I like to do it. That's my agro moderate conservative approach. However, some traders will, third, or quarter, however it is, or half and half, whatever it is. So effective is, first of all, it's got to be predetermined, right? It's got to be predetermined. In other words, the word add is a 4-letter word. It really is, because what happens is adding. So let's take some lingo and some things out of our vocabulary. Adding, defending, rolling. We don't want to do those things, because what they are just convenient things where we can deny the fact that trades are not going in our favor, and we somehow just kick the can. That's what those should all be called. Kick the can strategy. Now, if you want to kick the can, that's up to you, but please don't use those on a regular basis. We want to have predetermined levels, usually rolling, adding, defending. Those are never things that we're planning at the time of the trade setup. Those are things that we do that we think to ourselves we're being tactical, but we're just floating down that river of denial, right? So think about the zone before you enter the trade. Make sure those are predetermined, and that's probably the most important aspect of that, Andrew. Thank you for the question. What are my thoughts on gold this morning? So GLD, Robert, but I'll take a look at GC, inside candle, still heavy. We're on the lower half of the previous session. And this is a setup, by the way, on my cards on the table that I'm in via GC and GLD puts. And I'm not really concerned about what I'm seeing at the moment. I know that all three Fed members could affect gold, not because this is any kind of flight to safety. Never was, never will be. What this is a play on real yields. Federal Reserve members can affect the real yields by discussing where they think rates will be. Rates will then affect the bond yield. And it's the bond yield versus the inflation rate that is this. There's a chasm between the two. When that chasm narrows, gold will move. When that chasm widens, gold will move. And it'll be inverse to that. So ultimately, as long as we don't see a significant shift, an expectation for where we're going to be in, say, May of next year, Robert, I'm content with the short position. However, if we wanted to, excuse me, if we wanted to, we could start to move to a break-even stop, and maybe we'll talk about that this morning. We could start to say, hey, this is a holiday weekend. Fed members, FOMC meeting minutes can be ratcheted down and maybe go to a break-even stop on that position. So thanks for the question, Robert. And then, by the way, GC is what maps to GLD. I will not set up GLD. We'll set up GC. That allows me to consider options on GC, micro gold, and options on GLD, as well as GLD itself. All right, next up, Prince. If looking for a surf the wave trade, it goes yellow as it dips into the wave. Is that trade invalid? No, I will usually not consider that trade invalid if it's just a fresh shift, because I need two candles, regardless of the time frame of the candle interval. I need two candles to say, hey, this is adjusted from an uptrend into a neutral trend. So no, it will not. I would prefer it doesn't. I mean, I would prefer it stays in an uptrend during the retracement, during that pullback, but it won't necessarily invalidate the trade. No, thank you for the question. All right, Mimi, good morning. Is more likely the best trade? Okay, best trade will be Wednesday and Friday chop. Oh, I don't know. The question is, is the best trading Wednesday? Well, the most volatility will be Wednesday. And Friday, oh gosh, it's Black Friday. It's really a 4-day weekend. Folks are going to phone that in. The volume is going to be lower. Volatility can be a little bit unpredictable when volume is lower. But tomorrow, I don't know if it's going to be the best trading day, but it most definitely, Mimi, will be the most volatile likely of the week. Yeah, I am presuming that. I think that's a pretty easy thing to expect. Yeah? All right. Thank you for the question. Can I give my thoughts on REGN? Sure. All right, so looking at REGN, let's look at the daily time frame. And when I look at REGN, what I am looking at is first structure. So those of you that just finished the volume decoded class, you know that we are always going to start with structure. In fact, regardless of the kind of trading that you do, structure is going to impact the validity, the power, whether or not that strategy is the most applicable, effective one. That's dictated by the structure. And so we always start with structure. And then here, what I would say with REGN is we have an uptrend that transitioned to a neutral trend. I'd be bullish, but I'd wait for an oversold level, possibly a +1 standard deviation. That might be a really good place to look. So throw those V-score bands on there and look for a +1 standard deviation V-score reading. I would also consider, where is the support in terms of the Darvis, right? That'd be a good thing to look at as well. And then your other question was in terms of IBB. I'll tell you straight up though, Jose, I do not trade biotech at all. I mean, it's very rare that I do. However, I will tell you, I like IBB I like IBB better, Jose, than REGN. Look at the structure here. So while REGN lost the uptrend, went to neutral, so it's neutral to bullish, IBB is just straight up bullish. So I like IBB and any heavily weighted stocks within IBB that would look more like IBB, right? So let's see here, GILD, AMGN. Yeah, do you see how some of these are moving like IBB? That is what I would recommend we focus on. Heavily weighted stocks within that group that are looking more like the IBB. Or if there's liquidity in the IBB, go with the tide. We don't have to pick a boat, right, Jose? We don't have to pick a specific stock in that sector. We can go with the tide, the sector, and not necessarily the boat, like, for example, REGN. All right, next up is Starbucks. All right, so what do we have here? I'm short Starbucks at down to 97. Oh, you're short from 97? What's my view of Starbucks? I'll straight up, my friend, look, I don't know. Far be it for me to tell you what your strategy was at that time, whether it's valid or not. So all I can tell you is what I see, and we trade what we see. This is an uptrend. So when I have a green trend in right here in my multi-trend, I cannot short. It's quite frankly not even allowed. I'm not even allowed to consider a short. So I can buy the dip. Now, what I would say is if we get the dip, for traders like myself, we'll be looking to get long calls potentially. That might be your opportunity to say play them weakness down to say 93.20. And this is one thing leads to another. I'm rooting for you. I'm rooting for your pullback because that gets you hopefully to a profitable trade. And then it gets me to a potential entry. And that's the way I view an uptrend where I need short sellers. I need bearish traders to drive that thing lower. That's going to be closing the distance to my potential entry. So thank you for the question. And that's the way I'd view it. But I'm not allowed to short. So if you are trying to take advantage of a pullback, I'd say two targets, maybe 95.10 would be a place to go break even. And then I would say the closer we get to 93, call it 93.20, 93.10, I would start to definitely look to pay yourself. Well, you can, not when you have to, as I like to say. Christian, good morning. Anchored VWAP. How do we day trade a day like the last few days when the S&P doesn't seem to respect it and trades above and below several times a day? That's actually a great cue. Christian, what does that tell you? When price action is just total Ginsu knife through the VWAP, what do you know you've got? You got chop. What are you going to then do? Look at the extremes on the V-score. Look at the hourly price movement range zones. Use your slow stochastic. So even that is a cue to what type of strategy that you will best be compensated for without a better way of putting it. We're always looking for the strategy that's going to pay us. And if we're going up and down through the VWAP and it's not respected, very likely we're dealing with chop. So it's just another great visual cue for neither the bulls nor the bears have the upper hand. So let's grab the range extremes and position ourselves there. What are the implications? And there you go. That's the implication of that kind of price action. It's going to tell us what kind of session or what kind of environment that we're at the time, at that moment. And it's going to then guide us to where are the upper and lower extremes and how can we better position ourselves at those levels, not expecting a trend, not playing a dip, not looking for longer term follow through. We're looking to maybe be stuck in a range until price establishes itself above or below that anchored VWAP. So great question. All right. What are my opinions on exiting a trade based on a P&L target? I try not to do that, Andrew. I try to get in with either price on the chart or technicals or volume, and I try to get out. So I get in and I get out with hopefully the same methodology. So I do not use a P&L. And P&L has no reference to the reality of the market. It's only my reality, right? So what happens when people look at P&L is we love our whole round numbers. And I remember back in the day, mid-90s, day trading, we're slinging 1,000, 500 shares, 1,500 shares of different tech stocks. And I'd see these traders who would be up, say, $1,000 on a day trade. And now that that high watermark, and this affects us all. Now that I've got that high watermark P&L in my mind, I start to think that's my money. Never was, right? And then when that 1,000 pulls back to 900, we won't get out, regardless of price or technicals, because we have started to think that $1,000 was ours. And it leads to a lot of poor decisions. So I try actually to cover my P&L. I'm usually blissfully unaware of my P&L. I know what my price levels are. I know what my stop loss is. I know what my technical levels are, whether they be volume, price, or volatility, but I try not to look at my P&L because we have too much emotion tied to money. I'm not tied to an 80 reading on the stochastic, right? I'm not tied to 5,000 contracts. There's no emotional connection to that's mine, right? But dollars get emotional. And since most of us are not and likely will never be money numb, some traders are. Dollars just don't mean anything, and that's great. I'm not one of those traders, right? When I trade early on in my career, I knew when I put a trade on, that was the electric bill, that was the car payment, this is, the vacation. I was very, very keenly aware as a trader that my winning trades were what kept quite literally the lights on. And so it was very emotional, and I thought I got to disconnect myself from that. And that's how, I put the blinders on like they do the racehorses. I had to put the blinders on. Otherwise, I was too distracted by this thing that really had nothing to do with my trade. So I hope that answers the question, and then how I also overcame that issue. All right, next up, Natty Gas. TW, I'll tell you what, I have not been looking at Natty a lot. Is it overbought? It's very likely overbought. I'd be much more likely to short this area or long puts UNG. And I agree with you. Let's see, where's our point of control? We have an anchored VWAP. That's a kind of interesting level that I'm looking at there. Maybe not as pertinent. No, I really need to anchor that a little bit higher. I'd said I have to anchor that to the 23rd. Yeah. So you see that anchored VWAP? I'd keep an eye on that. But I'd be more likely to short or get long puts in UNG or NG the closer we get to about 694. The closer we get to 694, then I'm looking at 24 puts. The 24 puts on UNG. That would be the plan there. All right. Cool. Are we trading today in SSM? 5 days a week, Momo. Every day. Unless it's end of quarter, non-farm, or options expiration, we have our AM day trading session in the Sector Secrets Mastery. Absolutely. Lately, the schedule's been a little wonky because I have some live trading from the Volume Decoded class, but we're going to go right back to our schedule this week, right? I mean, obviously, we're not trading Thursday. I think we are going to have our session Friday. But yeah, this is our typical schedule. So we will be there. Okay. All right, gang. And just like that, speaking of trading, time to head over to the Simpler Futures and the Sector Secrets Mastery Room for our AM day trading session. That's been some of the most productive trading that I've been doing all year. 2 to 6 entries in about a 1 to 2 hour period, looking to be pencils down by 10:35 or 11:30. It's been a very productive part of the morning for me personally. And then, we're going to apply all our volatility, volume, and price tools to this 1 hour and 5 minute window, which has really been, look, the rest of the day, I'm almost to the point where if this is the way it's going to be through the end of the year, fine. But we're kind of finding a lot of productivity in that 1 hour and 5 minutes. In the meanwhile, we are looking at things like UUP. We are in trades like GLD. We've got our Halliburton trade, which should be looking quite good this morning. ConocoPhillips, we were able to take advantage of that OPEC news yesterday, unbeknownst, right? I set these up last week. It ended up OPEC was what closed the distance to our trigger. Should be looking a lot better this morning because crude, after a pretty dramatic sell-off yesterday, realized, oh, that's just a rumor. They're just talking about maybe increasing production. Whoopsie. And then we ended up at an oversold level. So this should look really good in terms of our entries for those uptrends in oil stocks, XLE, OIH, XOP, good stuff. All right, gang, as always, thanks for all the questions. And I will see you all tomorrow, same time, same station, Cash Insomnia. Now, I appreciate that. Smash that like button. Absolutely. Big shout out to the Free Trading Room, as well as the Simpler Trading YouTube channel and my YouTube channel, the Raghee Horner YouTube channel. Thanks as always for tuning in. I'll see you tomorrow.